Friday's weekly stock market update, everybody. And it is, as ever, really detailed. We're going to go through what the heck is happening with the markets. First of all, valuations. Microsoft, you're paying $29 for every future dollar or expected dollar in profits. You can see that there. With Apple, it's 23 you're paying. Google 20 and so on. So what's undervalued, and valuation isn't the only metric of what is likely to cause stock prices to move. What is undervalued? Well, as you can see there, energy, healthcare, telecom services, and financials. Now, that's not the only metric, as I said, of what causes share prices to move. So we will look at the other factors, and we won't just concentrate on undervalued stocks alone, because high growth and high momentum ones are quite good. These are all the things we're going to cover in today's broadcast. I will go through the S&P, the NASDAQ, Google, or Alphabet, Amazon, which I still own, Meta, which, as you know, I'd exited last week, Nvidia, which I exited, and you might say prematurely, Apple, which I sold half of, Microsoft, which I exited as well. Why? And am I premature in those? I'll answer those questions as well. As you know, in order for a stock to be purchased by me for a 12-month hold, it has to meet value, growth, income, cash return on capital invested, momentum as well, Sortino and alpha. Those two numbers come from the hedge fund industry, and I've explained those in detail as to why they're important. They basically give me a greater likelihood of picking stocks which will move more to the upside when there's a market tailwind and are less likely to have dips. And if they do have dips, they're quicker to recover statistically. The past is not a guarantee of the future, but in that case, it's a pretty good guide that we have. Over the past week, it's a tapestry. Don't read too much into any of it in any event. I will do a separate video on whether we should just chase momentum like there, or it's good to see that the undervalued sectors like energy and some of the healthcare and financials have been doing well. I own some of them, so I'll go into those. You see Meta fall off a cliff over there, and Netflix, which I don't own, but I cover regularly for this. You'll see my discussion on that as well. Now, exchange traded funds will get a separate video of these. A lot of red. China coming back a little bit there, but don't read too much into that either. Commodities, gold, not an area I'm a specialist in. And of course, crypto taking one heck of a whack over the past month as well. But we will come and do separate videos on those. What I want to go through for the moment, therefore, is to zoom in how things are so far. The S&P is up 5.8%. The UK up 4.5%, which is very unusual. That rarely happens, and it won't last that it's outperforming the NASDAQ. In fact, you could probably go long NASDAQ and short the FTSE and make probably quite a killing, because that is not normal for the UK to be ahead of the NASDAQ, and for sure that position will reverse. Similarly with the Dow, it's flat. There's only 30 companies in the Dow, remember. The NASDAQ's an exchange. The S&P is an index of 500 of the largest US companies. It's not an exchange. So you can have a company which is in the S&P 500, in the NASDAQ, and in the Dow. But that's how we're looking so far. Now, very much like 2023, the market's fast out of the gates and then gave almost everything up. In fact, in 2023, they went into negative territory before finally rising. Someone once said that the job of the market is to remove as many people as possible off its back. Now, I don't do top-down sector analysis and try and gamble on which sectors are going to do well. It's not what I do. However, if you want to see what is going ahead, energy, financials, industrials, communications, utilities. Essentially, it's not tech which has been the driver. Healthcare, of course, as well. Why don't I try and gamble on which sectors will do well, which horse will run ahead? Well, because it would be gambling. Instead, I'd rather look at the individual companies like Warren Buffett does and look at which ones tick all my boxes of value, growth, income, cash flow, Sortino, alpha. And that works out a heck of a lot better for likely success, I find, than trying to gamble on the right sector. What about factors? Well, there's only been a couple of factors, about 3 in total, which have held this market up. And over the past 12 months, over the past year, okay, so the previous was year to date. This is over the past 1 year, and it is growth, which has been critical. And the reason why my approach, I think, captures all of this is because we look at companies which are undervalued, which also happen to be high growth. So we've necessarily captured those. We won't have got stocks which are high growth and overvalued, fair enough, but at least we'll have got the undervalued growth companies, so we will have growth. Similarly, we'll also have companies within that subset which generate income and show momentum. So whichever of these factors is winning, we will have captured that subset. In order to do that approach, you need a large number to start off with, 10,000 equities we start off with, and we take those, and then from that, we get the few which meet all of those criteria. That avoids us having to gamble on what's going to be the winning one. Let's look at performance for the year. The markets over the past year, the Nasdaq's up 34%. 34%. You'd be happy if your pension was. The S&P up 22, the Dow up 12, and the UK lagging behind, as sadly is so often the case. The top S&P 500 companies over the past month. This is just over the past month. It's just for information. I will do a separate video on why purely chasing momentum is not necessarily the most sensible thing to do. And the bottom ones, the worst performers, are over there over the past month. For the FTSE 350, the 350 largest UK companies over the past month, there you go. And of course, for the past month, the ones which have been the stinkers in the UK. There you go. So let's look at the S&P 500. And what we see, a couple of things I want to point out to you. Of course, there's been a bit of a drop and then a bit of a recovery as well, right? You can see that there. I think it'll be similar to this period. Notice how 3 falling weeks, then a rise. Well, here you had 3 falling weeks, 2 weeks of rises, and then the bottom falls out. Why do I think it's more like that? Well, generally, when the weekly moving average convergence divergence, that one moves lower as it did then, but the monthly hasn't fallen, then that's the position. In other words, if the monthly is sideways or rising and the weekly is falling, you will get short-term falls like you had here. Okay, you would only get this scenario of deeper falls if both the short-term, i.e. weekly MACD is falling and the monthly is falling. They're not both falling. And can that happen? Yeah. How will you know it's happening? Well, if you get that scenario, then you should worry. In other words, if the monthly falls below its own moving average, that isn't happening. So as things stand, I don't need to worry with the S&P because it will probably do this. And that's why I sold my Microsoft and my Nvidia, because I had double leverage in my son's junior ISA in the Microsoft, and I kept my Alphabet and Amazon because their momentum looks better, and I'll show you those in a second, or in part 2 of this video, because I don't want to wait for what could be a 30% drop, not in the S&P, of course. A 10% drop in the S&P could equate to a 30% drop in Microsoft, for instance, and I don't want to wait for that. Even a 15% drop in Microsoft, I don't want to wait for. And then, of course, I'm not stopped from getting back in at a later date, but I wanted to pocket some of those gains because I'd held Microsoft since January of 2023, and it's over 100% up, and that's the unleveraged version. The 2 times leverage, of course, significantly more. So time to take some money. Now, the FTSE 100 tends to run out of steam when it rises like this. The momentum just doesn't carry forward. Will this time be different? Well, I hate to say in financial markets, this time is different, so I won't. The NASDAQ, remember with the NASDAQ, you can have rising momentum as we did there, but you can have falls where the depth of the fall and the duration before it recovers can be 4 months, and the depth can be deeper than that is. So whilst overall longer term it's positive and I'm not worried, short term that's the worry. With Apple and everything else, I will do that in part 2 to keep this under 10 minutes due to social media limitations. Watch out for part 2.